Mussie, nice to meet you.
Same here.
Now, I wasn't at your session. I apologize, but I was at a conflicting session. But I know your session's fascinating because it's all about emerging markets. And I understand that one of the interesting points about the session was, what exposure do your clients, your private clients, have to emerging markets? So what is that exposure and how do you look at that exposure maybe growing over time?
Okay, maybe before talking about the current exposure, I would talk about how we see emerging markets as an asset class. So basically, emerging markets, for good or bad reasons, are tactical asset class for us. So basically, we have at times from somewhere between 0 and 20%, both on the equity and debt side.
So what can I ask you? So they're tactical, not strategic?
It's not a strategic. It's not something that we have a permanent exposure to.
Okay.
But historically, we had times, long times by the way, where we were exposed to emerging markets on the equity and the debt side. And in some periods where we have zero exposure. And that is dependent on tactical asset allocation that the Wealth Management Investment Committee takes.
Do you think that's going to be like that forever? Or I mean, not forever, but do you see, say, a 3-year view that you might change that approach?
Oh, pretty much so. I hope so. But the thing is simply, for now at least, and the way things stand today, we don't have always exposure to emerging markets, equities, and debt. But when we do have, at times they were quite important and significant.
Yeah. And so tell me about how you find or how you access emerging markets for your clients. Are you doing country funds? Are you doing broadly based funds? Just tell me how you look at it and how you break it up.
It tends to be more regional basis. So basically, well, it depends. If you take, for instance, on the debt side, we tend to go for global, emerging market global debt funds, be it on the hard currency or the local currency side. On the equity side, it's more regional.
Okay.
We may favor sometimes Asia, but more so today now we have also specific calls on a given countries. Like we like Chinese equities, and on a tactical basis we would allocate to those equities. We did for Russia, for instance, at one point in time. So it's a mixture of both country specific or region specific and the global on the debt side. What
about frontier markets?
Frontier market for us, we don't have any direct exposure to them. We have an indirect exposure via the emerging markets exposure that we might have, or also some of these big developing market companies have also exposure to the market. So no, we don't have any direct exposure.
Now why is that? Is it because that's the risk level or perceived risk levels are too great, or is it you can't find the right vehicle or the right manager?
I would say it's both, because this asset class is a nascent asset class, and it has been so. And at some point, because there was no right vehicle to access, we were not considering them for the investment. And today, it's because the opportunity set and also the mood and the general asset allocation that we have tends to be on the cautious side.
Okay.
That's not something that we consider.
So I'm interested you say you tend to go global for emerging market debt.
Yeah.
So you haven't looked at dim sum bond funds or general Asian bond funds. You've kept very much global.
No, yeah, we have. For instance, we do have an extensive business in Asia.
Yeah, exactly.
And for Asian clients, Asian bonds are their home market. So we do consider them. But if you take the bank as a whole on emerging market debt, the latest allocation that we have made to this asset class were on a global basis. For sure, we like more Asia, Latin America than Europe, Eastern Europe, but we tend to go for the global. The asset managers that we choose, or the fund managers that we choose, do that allocation for us.
Now, have you gone to credit as well in emerging markets?
Yes. Emerging market credit corporates is something that we consider, we look at, and we find that asset class interesting, although we don't have any exposure today.
I still got to come back to this point that it's tactical, not strategic.
Yeah.
I mean, you know what's going on in the world. We're going through all the gyrations at the moment, and to what extent do you want to have a fixed allocation to developed markets at all? So I mean, what does it take for a firm like Pictet to make that shift?
Yeah.
I mean, is it is it a change at the investment committee, or how does that change happen?
It's a conviction. I mentioned that because it's an important point. For us, it's simply that it's not an asset class that we have exposure to on a continuous basis, but if you take emerging market debt, for instance, we were exposed to that asset class early on, by the way, in 2004, for instance, 2004, 2008, we had a significant exposure to emerging market local currency debt, which at that time was not.
Yes, no, you're right.
But it was a significant portion of our clients' portfolio, and we have done tremendously well with that. So it doesn't mean that we are very cautious. At times we can be aggressive, but it's not all the time. But it's going to change, I hope, hopefully. And if you are asking my opinion, and I have a strong opinion on that, on a typical fixed income portfolio, I don't see why you shouldn't have all the time emerging market exposure. It can be on a valuation, depending on the valuations, hard currency sovereign debt. It can be hard currency corporate debt. It can be local currency debt. But you have to have some of it because it's no-brainer. On the debt side, what's important is simply if the party that you're lending money to have the capacity to pay you back and the willingness. The rest is just history. It doesn't matter. So, from that perspective, emerging markets are in a better position to do so.
So what about BRICS? Because a lot of the discussion has been BRICS, and I'm putting South Africa in there now as well. That's yesterday's story. They're overplayed, and the real story for emerging market is not in the BRICS, and they have their own issues. How do you deal with that? I mean, I suppose, do you deal with it by not having BRIC, or do you have BRIC funds?
No, we haven't bought into that concept, actually. It's it has also to do with, especially on the equity side, we tend to look at markets separately or regionally. So from that perspective, there's no reason called BRIC. They have different dynamics, and what's Russia got to do with China?
Absolutely. I agree.
Simply because it makes an acronym.
It's a nice acronym. N11, N13.
Great for Jim O'Neill.
Great for Jim. We should have mentioned Jim O'Neill, but yes. Great for Jim O'Neill.
But the thing is simply, you're right, some of these countries and some of these regions have to be looked at on a permanent basis and to be evaluated for their merits. So,
I mean, obviously, you know, the company I work for, Investec, I mean, we spend a lot of time in the emerging markets, and it's challenging looking at the frontier markets because you are right, as you said, for your clients, the perception is the risk is so high there that are you willing to take that step? And then you have to add in the whole problem about liquidity. So how do you deal with the issue of liquidity? Because some of these emerging markets are less liquid. And you mentioned you may go into China or something. I mean, how do you deal with liquidity?
That's a challenge, of course. So basically, when we consider to invest in a given market, one of the aspects that we ask ourselves is, how can we access this? If it's on the equity market, it can be, take for instance, if you have a strong view on Chinese local market or the A shares market, how do you access it from a global or European perspective? So you have to have the right vehicle. And suddenly enough, there are not so many vehicles that you can use. So it also, in some ways, stops our desire to go out because simply there's not the right vehicle for our clients. You're right. But that's from time to time also forces us to look things at a globally,
so
especially on the debt side. Simply, you said before, Asia may be interesting, but if you take a global perspective and you're trying to access a global theme, it makes it easier to express, maybe.
Good. Well, I think you've given me an interesting perspective on it, and I share your view. You need to get strategic with emerging markets.
There's a very good anecdote that I like, and I was telling this morning. It's not my phrase. It's Jerome Booth from Ashmore saying, I'm a very risk-averse investor. 90% of my money is invested in emerging markets. So tells you it's all about perception.
It is all about perspective.
But it takes time. And hopefully we'll get there.
Mussie, thank you very much.
You're welcome.